Good morning, traders. It is Tuesday, June 24th. Hopefully the volume today is a little bit better. I think I had it turned down a bit too quiet yesterday. Anyways, taking a look at the charts, obviously equities are set to open higher, up about 1% for most indices this morning. I think the market's kind of moving higher with Trump announcing Israel and Iran kind of ceasefire that might have spurred on some energy here. We're definitely seeing small caps and large tech caps both up over 1%. So definitely seeing speculative small caps moving higher and large caps, which is a pretty good sign of a broad market rally today. If we actually take a look over the hot list, we had quite a few new triggers yesterday in terms of these purple news signs. It's telling us a bunch of sectors are showing some upward momentum, some renewed energy to the upside. XLY is an interesting chart that I'm looking at. It's built a really tight handle here. It is pointing to actually a fairly significant pop of potentially 15%. If the stock market does continue to move higher, this has got some potential to have a nice rally to the upside going forward. So we'll see how this goes. It looks like a kind of a cup and handle. Could be a bull flag pattern. The key here is that it's holding up in a very nice pattern. It is above the 50-day, the 150-day. It's above all of the moving averages. The 20-day, the 5-day had a nice big pop there yesterday, showing some signs of life. And it is trading higher in pre-market. So we'll see how that goes. Again, all the moving averages are in favor of higher pricing. So it's kind of an interesting sector to watch. It's a pretty boring one, consumer discretionary. Typically, the markets, we see sectors and stuff move when we kind of least think they're going to move. For example, in my opinion, I feel like the economy is slowly kind of slowing down. People aren't buying discretionary products quite as much as they used to be. And it's funny, when you think and feel that or see that in the market, sometimes those stocks are the ones that take off. It makes no sense. It's like the market climbs a wall of worry. I know a lot of people, you look at the fundamentals and what's going on in the economy. A lot of people are like, there's no way this market should keep going higher. Things look terrible, yet the market keeps going higher. And that's why we don't want to trade around news and opinions. We literally just follow the price charts. We can have our opinions of what we think is going to happen and what we should be looking out for to prepare ourselves that we could get a huge rally, we could get a huge sell-off. All that means is we need to be mentally prepared and we need to have a strategy in place that if one of those takes place, we're taking part of it, or at least we're avoiding the crash and protecting our capital. And that's the key here. So let's just take a look at where money's flowing. It is moving into stocks today. Bonds are moving down a little bit, down 0.25%. Again, to me, the bonds are still in a bearish somewhat environment. All the moving averages are kind of layered negatively. They're all underneath the 150-day. They're more or less sloping sideways or down. Short-term momentum for bonds have just turned green, but in the grand scheme of things, it is at resistance. Again, I'm not interested in the bond market at this point. I do think at some point they'll become a very good trade and part of our trading strategy again, but right now they don't fit any of our criteria to be owning bonds.